Yo, what's going on, everybody? Welcome back to another video. So in this video, we're going to start talking about more technical aspects of trading and what really goes on in the markets and things that you're going to experience. So pretty much what we're going to be talking about in this video are liquidity grabs. Now, what we're going to cover in this lesson are stop hunts, liquidity grabs, which are pretty much the same things, and liquidity pools. Now, what is a liquidity pool or a pool of liquidity? Liquidity pools are levels where the bigger players make decisions and large amounts of orders hit the market at these levels. These levels are typically found at areas of supply and demand. This is why we see really big moves happen at these levels of supply and demand, and this is why we want to take trades at these levels of supply and demand. Now, there's going to be times where you may take a trade outside of a level of supply and demand, which is perfectly fine. Just know that you shouldn't really be looking to increase your lot size on that specific trade. The trades that you really want to, really increase your lot size, and I'm not talking about going crazy on with the risk, risking 10, 20%. But definitely when I'm taking a trade at a level of supply and demand, I'm typically pushing it a little bit more. I'm doing like a 3-4% risk at times. Example, right? This is a liquidity pool. So this is an area, right? Notice this box is kind of highlighted here, this gray one, right? Notice how price, every time it hit this level, it had a big move to the upside, and we had big rejection of this level here, right? This is what we call a liquidity pool. Now, what is a stop hunt? A stop hunt is when market makers try and force some market participants out of their positions by triggering a pool of stop losses. So basically, all a stop hunt is, it's literally exactly what it says. Us as retail traders, we place stop losses. So if the market hits our stop loss, we get out of our position and take a loss. A stop loss is to protect us from, taking big losses on our accounts, right? And market makers know that we have stop hunts, so they intend to hit our stop losses. It's not every single day that this is going to happen, but just know sometimes it may happen. For example, right, 1870.23 is a resistance level here on gold, right? So resistance starts around 1868 and ends around 1872. Notice price came all the way up to let's just say 1880 almost, before going down. Market participants, market makers know that since this is a major level of resistance, there's going to be people interested in selling at 1870, which is resistance. So notice how market makers push price up, and then price completely drops after that. What happened here? Pretty much all that happened was market makers took some of the retail traders out of their positions, or some of the market participants. They triggered a bunch of stop losses with this candlestick here, and then price completely dropped, where typically you would have made a good amount of profit off of this move. The market makers took you out of this move before it even happened, and this is going to happen when there's a big move that is anticipated. Now, the way to avoid this is doing one of two things. Is either you use a bigger stop loss, or you enter after the stop hunt. But the risk you take is not knowing when the stop hunt is going to happen, right? So let's go look for some more examples here. What I mean by this, right? So I'm going to use this marker here, right? And we're going to make this red. And I'm going to draw a zone, which is going to be green, right? Or whatever. Let's make it green here, right? So in green, I want to say probably right here, right? So in between these two areas, right? So whatever's in red is typically going to be where you're going to find stop losses. Whatever is in green are going to be a bunch of sell orders, right? And I'm going to put this here as well. I'm going to make this blue, right? So looking at the previous videos, we also learned about buy stops, where a bullish candlestick has to trigger the buy stop. So typically what's going to happen is that people are entering sells in this green box, meaning they're expecting the market to go down at this green box here, which this would not be a bad setup to actually take, right? So let's say I was going to go short there. I could look to even target right here, right? This definitely wouldn't be a bad setup to take, where we're looking to actually sell at a major level of resistance, which you'll learn, I mean, later on, right? But this is a level of resistance where typically you're going to find a bunch of people are taking sell orders. And above resistance, we have buy stops. Just in case resistance breaks, people are going to be triggered into buy orders, expecting the market to continue to trade higher. So market makers know, obviously, where people are looking to buy and where people are looking to sell. So the way market makers also make money is by pumping price up, right? Notice the pump started here, ended up here. So they pumped price all the way up, right? Triggering a lot of people's sell orders, triggering a lot of people's sell stop losses. So everybody, or the majority of people that sold, that got stuck in this stop hunt, got taken out of their sell positions. At the same time, they're triggering a bunch of buy stops, meaning that if they entered buy stops here, their stop loss for the buy is probably going to be around this blue level, right? Look what happened right after the market makers took out a bunch of sell orders. It came right back down, anticipating, or where the sell would have played out, and also stopping out the people who bought up here. And price continued to go down and lower and lower and lower, right? So that's one example of a stop hunt. Let's go look for another one, right? So let's check this area right here, right? I see one right here. So let's go to the hour time frame and let's kind of go back in time to where we just were. Okay, right? So here's another example, right? And this could be a news event, but this is another example of a stop hunt, right? So notice again, 1795 is a level of supply and demand, support and resistance. Notice how we have support and resistance throughout this blue line. Notice how price was trading under this level every single time it came up to this level. Notice the break. At this point in time right here, this is where people started to buy because support held. So people are going to be placing their stop losses around this area maybe. And some people, you know, just consider it as this entire zone is full, well, green, we'll put it full of buys, right? Let's put this green again, right? So that green area is going to be full of buys. And this red area is going to be stop losses, right? And at the same time, there's going to be a bunch of sell orders here as well, right? And there's going to be sell stop losses up here. Remember, for every buyer, there has to be a seller, right? So notice how price started to reject. Market makers obviously know that this is a level that people are going to be very interested in trading. So what do? They pushed price down, triggering a lot of these buy stop losses, at the same time triggering a lot of these sell stops, right? I'm trying to word this very easily so you can understand as best as possible, because remember, for every buyer there has to be a seller, right? Triggering all of these sell stops here, right? And then price pumped up like crazy, taking out a bunch of market participants. So those are two real examples. What I'm going to do is kind of draw it out for you guys and explain to you guys what's actually happening here. So give me 2 seconds, right? I'm going to open up software here. We're going to open up Paint, right? So I'm going to draw out some market structure, right? And we're going to color code all of this. So let's just say this is a level of supply and demand that we're looking to take a trade from, And let's say price is currently trading here now, right? Red is going to be our stop losses for the buys, right? So typically if you buy here, you're going to place your stop loss under the level of support, right? And I'm going to make our buy orders in green. So we have buy orders all throughout this range here. So we have buy orders all throughout this range here. So remember, there's two types of buy orders. We have buy limits, and we also have buy stops. At the same time, we have two types of sell orders, right? And we also have market execution, but we're talking about buy limits and buy stops. You know, I'll include it as well. Market execution. And then we have sell limit, and then sell stops. In this situation that is playing out right here, the only orders that are really going to be placed are buy limits, buy stops, and sell stops, along with market executions. In this situation, sell limits wouldn't be placed, right? But we know throughout this range, there are a bunch of stop losses for our buy orders, meaning that there's stop losses for the people who bought using market execution, there's stop losses for the people who have buy limits, and there's stop losses for the people who have buy stops, right? Now, typically in a situation with a liquidity grab, the only person that really wouldn't lose money in a stop loss hunt would be the buy stop. Because again, price has to be going up to trigger a buy stop. So in the situation where there's a liquidity grab, which again, liquidity grabs and stop loss hunts do not happen very often, right? But like I said, you know, I'm gonna make the buy stops in yellow. So we have buy stops up here. Obviously, there's pros and cons to using buy stops. Like, you're not always going to get the best entry. You may not always be avoiding a liquidity grab or a stop loss hunt because they don't happen very often. And personally, I just don't use buy stops or sell stops. And we're going to make the sell stops in blue, right? So let's just say there's sell stops here. And we're going to put the stop loss for the sell stop in purple, right? So I'm going to write this out for you guys. So let me mark this off here. So we're going to put here the sell stop loss in blue. Well, blue is actually supposed to be here, right? Blue is going to be our sell stop, and then green we're going to have our buy orders, and then red is going to be our buy stop loss, right? So what happens in a stop hunt is the market makers see all of these orders, right? They can't physically see the orders, but you see pools of liquidity and they know where the majority of people have their stop losses or the other market participants, right? So before price actually moves up, and again, stop hunts do not happen very often, so I don't want you guys to get discouraged and feel like you're always being manipulated. But again, the markets are here for us to make money, so we have to play as smart as possible. Does that mean everybody makes money trading? No, that's not exactly what it means, but there is a potential for us to make money. We just have to play it smart and manage our risk, right? Because remember, just because you get stopped out doesn't mean the trade still isn't valid. If you get stop loss hunted, right, and the trade is still valid, you can re-enter the position. Just adjust your stop loss to go under or above the stop loss hunt. There you go. That's a solution for you just in case you get stop hunted, right? So I don't want you guys to get discouraged. But anyways, right, let's say right before the market actually moves up, all market makers are going to do are pump price down and then pump it up. How do they do that? By entering a bunch of orders with a lot of volume. They're dumping millions and millions and millions of dollars into these orders to make millions and millions of dollars by taking people out of the market, right? So notice here, this red line is going to be current price action. Price went all the way down, activated the people for sells. So people are now in sells because they have sell stops. At the same time, they hit the buyer's stop loss. Then what happens is they start dumping money in the opposite direction and price starts going up, hitting the stop losses for the sellers, then activating these other buy orders. So now that they have millions and millions of dollars in a buy direction and now a bunch of more orders are flooding in because of the buy stops, price typically has a big breakout to the upside. And that's exactly what happens when a stop hunt occurs. That's exactly what happened in this situation here. All of these sellers are activated and then taken out right away, and then price flew to the upside. Why? Because a bunch of buy orders just flew in. It's literally as simple as that. Right now, like I said, there's not always going to be a stop hunt, right? There's not always going to be a time where prices stop hunting, right? News. You definitely want to stay away from news because there's a bunch of stop loss hunts in news, right? For example, this is a live example here, right? I was in a sell on gold, right? My stop loss was literally up here above this high. I was short inside of this range around where these two candlesticks are. I decided to actually sell and I had another sell here. The news event hit and look what happened. My stop loss was triggered along with a bunch of other people's stop losses. Once price actually came back under my stop loss and started trading under the zone again is when I decided to sell again, with the stop loss being somewhere in this range here. And notice how price went down and finally in my favor. Was I right on the direction? Yes. Did I get stopped out? Yes, but I got back in, which made that loss back plus a little bit more. Does that mean you should always get back in on the trade? No. What I knew I was doing was risky and I had the potential to lose more, but I was willing to take that risk because I didn't take a big loss on the first position. And this is another perfect example of a stop hunt, right? So as you can see, right, this is another major level here. Notice how there was no stop hunt. So stop hunts don't always occur, but they do occur. They do happen. This is another example of a stop hunt right here, right? Because again, you know, a bunch of people are looking to take or taking sell orders in this range up here while others are taking buy orders here, right? So just keep that in mind. I just want you guys to keep that in mind, right? There's not always going to be stop hunts, but they will happen and they will occur. I just want you guys to come to that realization. So hopefully you guys understand what stop hunts, liquidity pools are. They're not really a complicated subject, but it's definitely something I did want to cover. And I'll talk to you guys in the next section.